We're just going to wait just a couple of minutes to give people a chance to sign on. We've got a lot of our participants waiting, and so we should be able to start this presentation in about 60 seconds or so. Okay, well, I'm going to get started so that we can get the program going, and we'll expect additional participants to come in the next couple of minutes or so. My name is David Bose. I am the Communications and Marketing Director for Washington Policy Center. I want to thank each of you for participating in this edition of Washington Policy on the Go. This is a special format today, something that we've never done before, which is actually turn our program over to another organization. And in this case, we'll be turning the presentation over to the State Tax Structure Working Group. And they'll be soliciting your comments and concerns about the nature of Washington's tax structure, how we should change it, how we might make it more equitable, better, more stable, all of those kinds of things. So we'll be taking your questions and comments at any time during this presentation. There's a Q&A box in the tool set here on Zoom. It's probably at the bottom of your screen. It may be on the side of your screen. It depends how you have your Zoom set up, but you'll see the Q&A box. That's the preferred method. If you have to use the chat, that's okay, but try to use the Q&A box. That way we can go in more of an orderly fashion, and I can track those questions and make sure that I get to your questions and comments as this time goes on. So what'll happen is I'll pitch this over to Jason here in a moment. Then we'll hear from Andy Gordon McLean with the State Tax Structure Working Group. He'll offer a presentation on what they're doing and why, and under what principles they're trying to use to guide themselves in this effort. And then we'll come back to you, and we'll have your questions and comments for the following half hour after that. So that's how it's going to work. Remember, if you have questions or comments at any time during the presentation, put them in the Q&A box there in your Zoom toolbox, and we'll get to all your questions. And oftentimes, on a big event like this, we might have a couple left over. Even if we have them left over, we'll get to them after the event itself. Now I'd like to turn to our Center for Government Reform Director, Jason Mercier, to offer some WPC perspective on this particular event and on Washington State's tax structure. Jason?
Great, thank you, David. What could be more exciting than taxes during the lunch hour? There's a big conversation happening in DC right now on federal taxes, but we don't want to get lost in the fact that an important state tax conversation is also occurring, and our legislator will be considering some reports next fall or next session there. And depending upon your perspective, Washington's tax code is either the envy of the nation or the worst in the nation. We know that we have led the nation in revenue collection since 2008. And when the credit ratings give the state's budget and tax structure an overview, we get high rankings because of the stability of our tax code, because we have very stable sources. We don't rely on the volatile income taxes. At the same time, there is a lot of concern about our Great Depression era emergency temporary gross receipts tax. And we lead the nation with the highest excise taxes in the country. Now, from the Policy Center's perspective, we've been routinely making the recommendation to take advantage of our competitive advantage of no income tax and maintain that, but replace the B&O tax with a single business margin tax modeled after what Texas does. And I think we'll hear a little bit more about that from the Tax Structure Working Group here in a moment. And also using some of our record revenue growth to reduce the sales tax, which hasn't been cut since 1982. So the question that we're going to be asking ourselves today and our lawmakers looking at, does Washington's tax code need tweaks, or is it time to blow up the entire system and start over? And the legislature has authorized this tax structure working group as part of the budget process to take a look at this question. And as Dave mentioned today, we're going to hear from them what they are recommending, looking at, as well as turn it over to your questions. So with that, I would like to turn it over to Andy Gordon McLean to tell us what you're working on.
Thank you very much. Just to say thank you to David and Jason there for holding the fort with a couple of technical problems that we had just starting off. Yeah, so this is going to be an interactive session, really, and the main reason why I'm here is really to explore your kind of feedback for the future of Washington State's taxes. Now, I'm just going to share my screen, and I will start my presentation. There's one problem here, which is that I have a disabled participant screen sharing. The function, you may need to make me a co-host, David or Jason or anybody else who's a technical person as well.
Others. There's always a new challenge.
There are others on the line. You just have to make me a co-host.
You should be co-host right now.
Yeah.
Great. Let me try again. Fantastic. That is it. Okay. So one moment. I just need to get the chat back. So today's going to be, as I said, very interactive session. The overall tax structure of Washington State has not changed in over 80 years, and the economy and the state have changed dramatically in that time. And the legislature determined that it was time to take a look at what could be updated or changed. So my name is Andy Gordon McLean, and I'm going to be your facilitator or guide, if you like, to explore different ideas being considered by the tax structure working group, to the tax structure work group, to update Washington State's taxes. I'll give you a background to exactly what the tax structure work group is as well in a minute. So I'm here on behalf of the tax structure work group, and in addition to me as your presenter, we have a couple of people here who can also answer any more technical questions. And then our expertise is being provided by the Department of Revenue representatives as well as Echo Northwest. So I'll just go over to Morgan Shook here and to allow him to introduce himself.
Thank you, Andy. So myself at Echo Northwest, an economics planning firm here based in Seattle and the Northwest, along with Triangle Associates, have been contracted to work with the tax structure work group and the Department of Revenue to sort of help facilitate this engagement. We're really excited to sort of bring some new ideas and some old ideas and get feedback from a variety of different constituents across the state. So as we kind of move forward, if there are kind of questions and clarification, and I see a few of them already kind of popping up in the Q&A, we'll do our best to address that. I'm also joined today with my colleagues from the Department of Revenue, Valerie Torres and Braden Fraser, who can answer a lot more detailed questions around some of these, I think some of the technical questions that are popping up on the Q&A, and they'll do their best to sort of help address those. But Valerie, Braden, maybe a quick introduction.
Thanks, Morgan. Valerie Torres. I work at the Washington State Department of Revenue in the Research and Fiscal Analysis Division. So we are the division that has been tasked with doing a lot of the modeling around the different scenarios and anything requested by the tax structure work group.
Fantastic, thank you. And Braden, you want to?
Thank you, Andy. Yeah, so my name is Braden Fraser, and I am in the Legislation and Policy Division, the sister division to Research and Fiscal Analysis. We're more of the structural people, if you more of the legal side, I guess. So looking into constitutional issues as well as how these taxes would be structured and considerations of that nature. So thank you.
Thanks a lot. So going on from there, this really brings me on to why we asked you to join us today, and thank you to Washington Policy Center for hosting us. Because we really want to hear your interests, your values, as well as your preferences when it comes to personal and business taxes, so that tax policies can be improved and better meet everyone's needs. You do not have to be, I just want to emphasize this, I think, you don't have to be a tax expert to be here. And then in fact, that's the very reason why I'm kind of doing this presentation right now. So we want to hear from you as the taxpayer or business owner and get your opinions on what the future of Washington's taxes could look like. We want to hear which parts of the proposed changes and the scenarios that I will be presenting to you in a minute are confusing, and so that we can kind of improve future discussions. And so the feedback, we're going to be, I'm going to be presenting a survey to you in a little bit, which you have the option of filling out while I make this presentation. You can also do that later. But that's really one of the most important ways in which the Washington Tax Structure Group is really going to get feedback, is from people filling out this survey. And so I really want to encourage everybody to do that when they have the opportunity. So today's conversation, first of all, I'm going to be giving you some background about Washington State's taxes. I will then be showing you some ideas the Tax Structure Working Group is considering, and partly kind of leading you through a 9-part survey, each question at a time, and asking any questions you may have about this. And finally, we'll be wrapping up and giving you some information about our next steps in the process. Just to quickly establish some ground rules, as I said earlier, we're really wanting to get citizens' opinions on the proposed new changes. If perhaps you are not an expert in tax, you're in good company. The hardest thing in the world to understand is the income tax, which is from no less than Albert Einstein, a rather renowned physicist. So if you're not entirely understanding the tax code and the different taxes that I'll be presenting to you today, it's not a problem. Therefore, we feel there are no wrong answers today, and we ask you to share your ideas and speak up. You can share your thoughts in the chat, or the raising your hand. You can switch your camera on and raise a hand, or come off mic. You could also just kind of, and enter it into the chat as well. And so we just request that you hold space for others, especially those who hold different opinions from your own. The broader the debate, the greater the understanding we can create from this. So this is going to be a very interactive session and conversation today. So to start this off, please enter into the chat one word or phrase that comes into mind when you hear the word taxes, or when you hear the word tax. What is one word or phrase that comes to mind when you hear the word tax? Okay, so we've got quite a few things kind of going in. I'm seeing kind of idea of burden, waste, high, government taking. Okay, burden, quite a few, seeing quite a government. So yeah, so quite a few things coming in. Obligations, services, excessive. So quite a few different opinions, I think, coming in there. Thank you. A tool. Okay, so quite a few different things coming in there, and a variety of opinions, which is fantastic, which is really what we're looking for. Accountability, another thing that is coming in there. So thank you for that. So going on from there, I'm just going to give you a quick background into the tax structure work group. Just here, the video here will just be giving you a summary of what the tax structure work group does. May take a minute to load.
So what is the Tax Structure Work Group anyway? The Tax Structure Work Group is a collection of policymakers working together to develop recommendations for making Washington state tax structure more equitable, more fair, stable, adequate, and transparent. The group isn't looking to increase or decrease the total amount of tax money collected by the state. It's just looking at the combinations of tax types that could generate the same amount of tax money. The group is only investigating different types of taxes with the goal of improving Washington's tax structure, not a change in overall tax revenue. There are a whole lot of different taxes like city, county, special district, tribal, and even federal, but this group is charged with only looking at Washington's state taxes. So who's in the tax structure work group? The tax structure work group is made up of Washington state legislators, both Democrats and Republicans, along with representatives from the governor's office, Department of Revenue, the Association of Washington Cities, and the Washington State Association of Counties.
Okay, so a few kind of different, so it's kind of a basic background. I think the most important thing to just to summarize there is that this is a cross-party kind of working group. So it has both Democrats and Republicans, and the aim is to change the way the tax works, not to increase the amount of taxes collected. So where are we in the process? So last year in 2020, there was a lot of background economic research carried out. And now in 2021, we are consulting communities and businesses. Policy development is planned for 2022, and the final part of this process would be the proposed legislation planned for 2023. As things stand, a lot of background research has been done. Right now, it's important for us to collect feedback from communities and businesses and Washingtonians and such as yourselves. So why update Washington State's taxes? Well, as I'll show you another video just kind of coming up here, we will have a chance for discussion and debate in a minute, or rather discussion. But just before that, we've got a little bit more background that I'm going to give you. But yeah, do feel free to enter any feedback, ideas, thoughts that you have into the chat while we do this. The more information, things like that, we can collect, that it's really useful to us. And partly what we're trying to do today is really to start a bit more of a debate and to get more feedback on this. But there are four main principles that this has been based on. This is fairness, stability, transparency, and adequacy. And this video will give you a little bit of a background into those.
The Tax Structure Work Group is exploring changes to Washington state tax structure. This work group is asking, is our state tax system equitable and fair? Is it stable? Is it adequate? Is it transparent? But what do those terms really mean? Let's break it down. First, fairness. A fair or equitable tax system is one that is fair to people and to businesses. A fair tax structure must consider different viewpoints of fairness. One view of fairness is that those individuals and businesses with higher incomes or revenue should pay a higher percentage of their income or revenue in taxes, and those with lower incomes or revenue should pay a lesser percentage through graduated or progressive rates, targeted tax credits, or exemptions. This view of fairness considers the capacity of a taxpayer to pay the tax. Another view of fairness is that all individual and business taxpayers should pay the same percent of their income or revenue in taxes, regardless of their income, through flat taxes or the same tax rate applied to all individuals and the same rates for all businesses. This view of fairness considers the consistency of the tax structure. The Tax Structure Work Group is considering changes to the tax system that would create a balance of these different views of fairness. Next is stability. That means the tax system provides a reliable amount of money, even with ups and downs in the economy. Transparency means that taxpayers know when to pay taxes, the amount they need to pay, and how to make those payments. And adequacy. The tax system needs to collect enough tax revenue to pay for established public services.
So just going on from there, if you'd like to just enter into the chat, what type of taxes do you currently pay? If you just want to enter that into the chat, what type of taxes do you currently pay? What type of taxes do you currently pay? So I see business B&O or business and occupation tax. So okay, we've got sales property, excise, quite a few. Just to emphasize that today that we're going to be talking about Washington state taxes. So it's just Washington state taxes. So it's not federal or other kind of different kind of local or taxes that we're kind of focusing on today. Thank you for kind of entering those into the chat. Now, for Washington State, the way as things currently stand, the sources for Washington State's main budget are comprised of a general sales tax, which makes up 45% of the budget, followed by the business and occupation or B&O tax, property tax, selective sales tax, as well as other taxes. But it is this the taxes that go towards the main budget that we're going to be focusing on today for Washington State. So there are three areas of taxation that the work group is focusing on, which will also be subject of the presentation. First of all, that is property taxes, which are taxes on homeowners and property owners that they pay for the property that they own. The general sales and use tax, these are the taxes that we pay when we buy goods, which could include clothes or furniture, as well as services. A service most people will use at some point will be parking or eating at a restaurant. And finally, the business and occupation tax, paid by a business based on the amount of money they make before subtracting their costs. So this is different from paying taxes based on profit that would subtract that cost. So I'm going to be referring to these three types of taxes throughout this presentation as those that we currently pay in Washington State. In addition, the tax structure work group is looking at some other types of taxes, which I will come on to later. Just note that there are other types of tax, like the gas tax, that provides revenue, not for the general fund, but for the transportation budget. The tax structure work group is only focusing on taxes that provide revenue for the general fund. Also, it's important today that we'll be to emphasize that we're talking about state taxes and not other taxes you may pay to counties, cities, or other districts. And so next we'll watch a kind of a short video that explains the type of taxes that the work group is considering.
Under the current tax system, low-income and middle-income people pay a smaller amount of tax, but a larger portion of their total income in taxes than higher-income people do. Higher-income people pay a larger amount of tax, but a smaller portion of their total income in taxes than low-income and middle-income people. The tax structure work group is discussing how to balance the capacity of an individual or business to pay tax and the consistency in the taxes that they pay. For example, the tax structure work group is looking at ways to make Washington state taxes fairer for people who live here by considering reductions to the property tax and sales tax and replacing this with alternatives like a wealth tax or income tax. People in Washington state already pay property taxes and sales taxes. As you know, property taxes are taxes on property, like a house or condo. Sales taxes are taxes on things people buy in stores or online. The work group is exploring a wealth tax, which would be a tax on financial property like stocks or bonds over $1 billion. The work group is also learning more about a personal income tax and a corporate income tax. A personal income tax would be a tax on the income people earn. A corporate income tax would be a tax on a business income after subtracting expenses and other costs. Remember, the group isn't looking to increase or decrease the total amount of tax money collected by the state, just looking at combinations of tax types that could generate the same amount of tax money. The group is only investigating different types of taxes with the goal of improving Washington's tax structure, not a change in overall tax revenue.
So, Thank you for following along. In a minute, you will have a chance just to kind of ask questions and things like that. I'm just going to now just go briefly over a summary of the tax scenarios that the work group has looked at. Now, within this, if as I said earlier, if you're not a tax, it seems like quite a few people here today are tax experts or know quite a lot about it. If you are not familiar with some of these terms, don't worry. The idea of today is I'm giving, especially with this next slide, is I'm giving you an overview as to all of the different scenarios that are being looked at. So first of all, the tax structure work group has been considering a change to the property tax limit factor. And as well, this really, more concerns kind of personal tax, is updating the property tax and also combining that with taxing personal wealth. Now, again, I can go into these details further. I will be going into these details later in my presentation. Another thing really for businesses, and these next two scenarios really look at businesses, are the idea of replacing the business and occupation tax and adding either a value-added tax or a margins tax combined with an employer compensation tax. In addition, a final scenario that has been looked at has been looking at, again, eliminating the B&O tax, reducing sales and property tax, and then introducing a personal income tax and a corporate income tax. So within that, I am just going to open up the floor a bit and give you a chance really to ask some questions. I'm going to stop sharing my screen for a moment. And to ask a question, you can just use the raise hand function. You can also kind of enter that into the chat. For the more kind of technical questions, I refer to my colleagues, Morgan, Echo Northwest, or Valerie Torres and Braden Fraser at the Department of Revenue.
Since this is set up as a seminar, I'm not sure that the raise hand function will work that well. So let's start with this from the Q&A box from Robert. He wants to know how many times have Washington voters voted down an income tax? And I think the direction of that concern is, why are we talking about an income tax when voters have, and you're looking for input, and voters have offered that input about an income tax? Obviously he's alluding to several times. I'm guessing it's a rhetorical question. So what is the perspective of the committee on that?
Yeah, Andy, I'll take that. So I think I'll kind of pick up. I think you're right, David. Right, like last time I'm going to say it was 2006 and went down somewhere in the range of 60 to 65, 35, if I recall off the top of my head. Could be wrong with those numbers. But I think the tax structure work group in putting together these ideas is really kind of wants to hear feedback around three ideas, right? And I think the way to think about it is the first idea is, should Washington change the way it taxes property? The first part of that, right, is obviously the limitation put forth initially with Initiative 747 around the limit factor in the property tax collection. And then the second piece is whether or not a wealth tax should also be, or wealth in this for, financial assets should also be considered property subject to taxation. So I think that's the first question, right, they want to ask. And in doing so, right, with that, and Andy will get into this, with that sort of first, with the taxing of wealth, it would also be paired with a primary residence property tax exemption that would exempt the first $250,000 of an individual's home from taxation. So they're, in order to keep a lot of these ideas revenue neutral, they're considering the combination of those taxes. The second idea, right, that they want to hear about is really about how we should think about how businesses are principally taxed in the state of Washington. Obviously, I think Jason summarized the B&O issue succinctly, and many folks here are obviously very familiar with the range of criticisms of that tax. And so the three ideas that they have put forward there is, one, the value add tax, right, that moves away from gross receipts and starts to consider the sort of value add of a business and producing products, and that should be the basis of the taxation. The other one that Jason alluded to is the margins tax, kind of Texas style, where you start with your gross receipts and then you're allowed a series of deductions that you may choose based on sort of what fits your business probably most appropriately. And then the last idea is related to the last question on the business taxation issue, and that's really, should the state tax income? In this case, pairing reductions in the state property tax, or reduction in how much property tax is collected through a sort of that property tax exemption, reductions from the sales tax, so lowering the state rate from 6.5 to 4.5, but then obviously moving forward with an income tax for both business corporations and individuals. And there are two flavors of that. The first one, right, is a sort of a series of flat taxes for both businesses and individuals, and then one with a progressive structure to it. And I would say the simple answer from I think from the tax structure work group's perspective is these aren't proposals, they are ideas. They are ideas which, even amongst the tax structure work group, you'll find any disagreements on whether that is the right thing to do. But they all believe that this is a question they would like the public to weigh in on in 2021. And obviously the public has weighed in on it in the past, and they're asking the public to weigh in on it again, I think is the simplest answer. I can't remember who originally asked that question, but David's sort of reconstitution of it from the Q&A. So hopefully that's helpful in understanding kind of where the tax structure work group is coming from. And I think they would appreciate your response of saying, hey, we don't want an income tax, I think, to answer your question. Or they would like some understanding of kind of, and not just sort of no, but they would actually like some understanding about why too, as they kind of try to come back and find some consensus agreement points around potential changes to the structure of the state's taxes in 2023.
Let's follow that up then with another question coming in that's related to that, and that's, do income tax scenarios include netting out costs of bureaucracy, personnel benefits, processing and reviewing returns, collections, and other costs?
Yeah, so has the tax structure work group considered the administrative costs of implementing the tax? And I would say at this point, no. So right now they're simply looking at saying, we're not looking to increase the amount of revenue. We're simply trying to sort of figure out sort of what those replacements are. So as they kind of move forward with proposals, they'll actually have to answer that question. So if there are reductions to say, as they've sort of contemplated in that sort of idea for change of lowering the property tax, lowering the sales taxes, are there sort of administrative gains there? And what would then be required to administer a new personal and corporate income tax, perhaps, right? And so they'd have to figure out sort of how to unnet balance those things. So hopefully that's a long answer to say, no, no math has been done, but if that moves forward, that math will have to be done.
Next question is from Richard. What were the brackets and rates used for the progressive income tax scenario F?
Yeah, I don't have those right off the top of my head. Valerie, do you have those handy to talk about, to provide that? Thank you.
Yep, just need a couple seconds here. Hang on. My password timed out.
That's Murphy's Law right there.
Isn't it?
Yep.
As Valerie's pulling that up, the tax structure work group gave guidance to the department in terms of how to structure those rates and to basically use the state of Oregon's rough sort of marginal rate structure, but then to sort of transpose that on sort of Washington's income profile, in that Washington has generally higher levels of income. So proportionally, the marginal rates were set at levels that, the number of levels and the spread of levels that look like the state of Oregon's, but are basically been adapted to adjust for, well, Washington's income profile. Go ahead, Valerie.
So these rates and levels are based on taxable income. So please keep that in mind as you think about them a little bit, that taxable income and gross income are not necessarily the same thing. So for the corporate income net receipts tax, we had two levels. The portion of the taxable less than $1 million was going to be taxed at a proposed rate of 3%, and the portion of taxable more than $1 million would be taxed at 3.75%. For the personal income tax, the marginal rates were a little different. And again, this is where it's really important to remember taxable income. So the portion of taxable income less than either 3,450 for a single filer or 6,900 for a joint filer, the rate would be 2.1. The portion of the taxable that is more than those numbers, but less than 8,500 for a single filer or 17,000 for a joint filer would be taxed at 2.9%. The portion of the taxable more than that, but less than 125,000 for a single filer or 250,000 for a joint filer is 3.8%. And the portion of the taxable that is over those numbers in both cases would be at 4.2%.
Okay. With that question answered, let's move on to this question from Benin. Why are you looking at decreasing the total tax collected? We currently collect more money than we need. Remember, when you have a tax, it's something to be discouraged, i.e. liquor, cannabis, tobacco. So why isn't the working group looking at decreasing the total tax collected?
And maybe I didn't quite hear that right, David, but if I understand the question is, why is the tax structure work group not looking to reduce the overall amount of taxes?
Correct. Yeah.
I don't know the answer to that. In their work, both from a sort of philosophical, technical perspective, I think for them, they wanted to forward these ideas under sort of a revenue neutral perspective, so as to not sort of mix sort of issues of spending necessarily, right? Should we spend more or should we spend less on certain things? I think obviously there's a vigorous debate on that at the state legislature every year. But for them, what they really are focused in on is the structure of the tax, right? So what is the composition of that? How does it relate back to those kind of principles of fairness, adequacy, transparency, stability, and are there ways to improve currently what we have? Only in the sense that the state structure has stayed fairly similar for the most part, at least at the highest level. And so all the way to say is basically the focus is really on the revenues. And the idea here is really to say, what is the composition of the tax structure, the structure of it and the composition of it? And is that an improvement over what we have today? So hopefully that helps answer that question.
Next question is from Mark. Looks like Mark Harmsworth from WPC. No consideration of L&I change. It is another tax since the state is a monopoly and the business has to pay a monopolistic fee. Are those kinds of things being considered?
The tax structure work group is taking comments on a range of different taxes. I've looked at there are many questions about sin taxes and other kinds of fees, and I think please do forward that information. But I think the tax structure work group is really focused on kind of the biggest level, right? I mean, I think there are always these questions around specific enterprise and how those are funded, but they're really wanting to say, to the extent that we have a set of general taxes that are used to fund the state's obligations, what should be the composition of that? So hopefully that's helpful, because I appreciate and I see it in the question, there are a million of these things and they're all really great questions. But I think in order just to narrow the feedback, I think what they're really hoping for you to do is to kind of weigh in on those center questions. I think if I had to kind of go back to it, should we think about how we tax property, both in terms of the limit factor as well as wealth and financial assets? How should we think about ways businesses are taxed, and are there ways to improve the current sort of B&O approach to it? And the last one is, should we really reduce our reliance on certain types of consumptive taxes like the retail sales tax, or even provide some relief on the property tax, but then to replace the revenue with taxing income, both on the corporate and business side, corporate and individual side. So I think, there are a million questions to ask, but I think for them, these are the ones they want constituents to weigh in as best they can.
Next question is from an anonymous attendee. So I have a question and a statement. First, I'm in King County, and our unincorporated areas have the lowest amount of businesses, hence generated sales taxes in our unincorporated areas out of any county in Washington state. So when as a state overall, King County is doing the worst, why would we support another type of tax when we don't even support small business? Honestly, if we actually supported a small business as best as possible, we could eliminate every other type of tax and keep our Department of Revenue sales taxes by itself and have plenty of generated revenue to sustain the state. Any thoughts on that?
That's a lot to unpack there. I don't think I have an easy answer to that question. But I think, that is feedback that we'll be sort of cataloging and bringing back to the tax structure work group. So I appreciate Anonymous for weighing in on that. I think, I think the issue that they are paying attention to, I think I just hinted at in that question, is obviously this group is a set of folks at the state level, right? And they're concerned with state taxation, but we all know that things like the property tax affect counties, they affect cities, right? The sales tax affects those same types of and other special purpose districts. So there is sort of this interplay between sort of how does the state organize itself for taxation relative to the downstream effects of how should those locals then, right? So if we went to say, got rid of the B&O for the cities that have a B&O type of tax, right? What are the implications there? So they are aware of those kinds of issues and we'll be tracking them along, but they're kind of trying to keep at least this conversation more narrowly focused on the state side of things.
Next question's from Jan. The biggest challenge to tax reform in this view is that most citizens don't trust the legislature to just bring back taxes, the taxes replaced at a later date. So, get rid of a tax, it's going to come back. Is there any consideration to a constitutional amendment that would prohibit this example or this scenario?
Yeah, so there are no contemplated scenarios that have what they typically call sort of legislative or constitutional revenue checks as part of them. We obviously have one with the 1% limitation. I would say part of that is because these are designed as revenue neutral sort of ideas, but I think your feedback is well taken and a sort of very valid perspective that the tax structure work group is aware of, that constituents are concerned about overall burden and there are concerned about sort of that in the long run. So I'll just say we don't have anything specifically, but I think that is a very important piece of feedback that we'll take today and bring back to the tax structure work group.
Next question, can we look at eliminating property taxes? Too many people are being taxed out of their homes, especially on fixed incomes, regardless of the 1% limitation. Since appraisal values continue to go up, the 1% limitation is becoming irrelevant. If appraisal values go up by 10%, the 1% becomes a 10% increase.
Not quite how that works in the state, but I would say the tax structure work group is aware of the issues around the property tax burden. And so I would say specifically the scenario they crafted with the addition of the wealth tax, right? As well as addition of the wealth tax that has the the ability to have a primary residence property tax exemption to give property owners or homeowners, right? A tax exemption of the first $250,000 of their home was their thinking and sort of responding to that issue around sort of property tax burden as it relates to sort of, I think, housing security, I think is that question articulated. But in order to do that, in order to keep it revenue neutral, the tax structure work group also said, well, here's an idea for creating additional revenue to make up for that sort of lost revenue on the property tax side with the addition of the wealth tax.
Next question comes from Per Olaf Swanson. I'm curious about excess taxes and how they're spent compared to the intent. For instance, Seattle's sweetened beverage tax was meant to go to childhood health care, which was an existing program. The city put that money into the program, but then directed the initial funding of the program into other programs, essentially creating no increased health funding. If I remember correctly, they also made more money than they expected to and shifted the extra into other programs. How do you build this tax structure that does not allow for loopholes like this? So while they're giving a Seattle example, I take it that they want you to apply it to Washington State.
Yeah, I would say I think that response is very insightful, related to sort of, I think, discretionary taxes that have sort of dedicate funding to specific services. I think the tax structure work group, right, is aware that in some cases, a lot of these taxes have sort of sub-dedications to them. And if revenue has to change and has a different composition, that there will be the subsequent work to then to obviously come back and fix those ties back to spending. I don't know about the specific question about the larger issue, but I think for them, it's important to say revenue is one side of it and spending is the other side of it. And to the extent that those two are linked legislatively somewhere in statute, that they would need to come back and address those issues.
Will the working group consider adding estate tax brackets above the $9 million level, e.g. 25% above 50 million, 30% above 250,000, 35% above $1 billion? So what's the consideration there? This is from Richard.
This is on the wealth tax.
Mm-hmm.
Yeah, right now the assumptions in the wealth tax are modeled after a bill introduced in the 2021 legislature. So I would say if and there are sort of obviously some hard. Oh, sorry. I see Richard says the estate tax. Right now, they're not contemplating, at least in the scenarios that are brought forward here, there's no assumption around changes to the estate tax. So I would say if you have feedback specifically about the estate tax, we'll definitely take that and roll that forward to them as well. I'm going to pause. I see Andy flagging me because I know we have a little more to cover. We can probably spend all day.
This is fantastic. This is fantastic to have this amount of feedback and lively debate. This is exactly what we're looking for. So thanks so much. I would say I'd pause just to say that I'm keen to present everybody the survey, and that's going to be like a really important source of information and feedback. I also have quite a lot more of my presentation, which I'm not probably going to get to over the next 10 minutes. But I can just start to present like the beginning of the survey. But it's really up to you as really the host, David, if you would like to go over other questions, or if I can go forward with just kind of showing the survey.
Well, why don't we have you go forward? And if we don't have time to get to additional questions, or if we run out of time for some questions, we'll pass those questions on to you so that you can answer them directly. Or we'll get the answers and answer them directly. So let's let you go through your survey and continue your presentation.
That sounds great. And I'd also say that there will be tax town halls coming up on, I think, kind of Wednesdays. And so anybody here can attend one of those as well if you're kind of seeking more information. So aforementioned survey, just right here, you can do is just put with the QR code, you could put your phone just up to that when you use your camera, and you could get onto the survey that way, or you could just click on the link, is another thing that you can do. And so, yeah, so this is going to be one of the main sources. Your feedback here is fantastic, and this is going to be recorded, responses and questions are all anonymous, but this is going to be really useful to inform the tax structure work groups policy development. So anyway, I can just kind of lead you through the first couple of questions. We're probably really going to get time just for the first couple of questions of this survey, but you can go through this if you would like. And this is also with the survey, you can go through and back, so you don't have to finish until right at the end, so you can go back and forth through the different questions. So as we've just been kind of heard, some of the principles behind the work of the tax structure work group, fairness, stability, transparency, and adequacy have been presented to you. So the first question of the survey really asks you to rank these different principles, from 1 being the most important to you, and 4 being the least important. So that's kind of one way you can kind of give a bit of feedback. And another thing that I think there are different definitions of fairness, which the tax structure working group has been really felt it's very important to represent both of these ideas of fairness. And so this idea of fairness is really in the second question in this survey, as of kind of what does a fair tax system look like. And so the first question, the first choice, 2A, asks you if you agree that the idea that people with higher incomes or revenue should pay a higher percentage of their income or revenue in taxes, and those with lower incomes or revenue should pay a lesser percentage. That is capacity. So you'd be, if you agreed with that, you would be selecting that answer. And the other one is consistency. And this is another idea, obviously a different idea of fairness, which is that all individuals and business taxpayers should pay the same % of their income or revenue on taxes regardless of their income. So if there are any kind of questions and comments that anybody kind of wants to come up with there, it may be, David, do you have a preference of how I proceed? I can just go through the kind of next few questions as well, more kind of presenting, but also this is a chance for your members, your people on this call to ask more questions as well, if you would like.
Why don't you go through it, just a couple more questions, and then we'll close it out with a few more questions from the audience.
Sounds great, thank you. Okay, so just continuing there. Question 3 is really based looking at a scenario. Again, these are just scenarios, these are not proposals, these are scenarios. And I'm really looking to update the state property tax. And the principle behind this that you looked at in the first, some of the principles you looked at in the first 2 questions on this survey are that the tax system collects enough tax revenue to pay for established public services. So a context kind of for this, the current tax structures, the property tax is just restricted to land and buildings. And by law, the annual kind of growth of property taxes by the state is limited just to 1%, kind of annual kind of growth limit by 1%. So in this scenario, which you'll ask your opinion on, there's a change to the state's property tax which would increase in line with the economy's growth. So it would follow the number of people living in Washington state as well as inflation. So that would increase according to that. So in summary, question 3 asks you what you think is a better limit on how much property tax and revenues can grow. The current tax system, which is kind of 1% growth a year, or a revised limit based on growth of population and inflation, or you can also answer, I'm not sure. Question 4, we're really not going to get kind of much of it. There are nine questions. The last question is very short, but yeah, I encourage everybody who can to fill this out. But the next question really looks at updating personal property tax and taxing personal wealth. And so, as I spoke earlier, we have 2 different definitions of fairness, which include the capacity of individuals to pay, as well as the consistency in which the tax structure applies across different properties. So as we saw in question 1, under the current tax structure, property tax only applies to lands and buildings. Now, under this scenario, you'll ask your opinion on in question 4. It's really on whether we would this would be replaced with the combination of an exemption for the first $250,000 of a person's primary residence value, which would not be taxed, but then with a wealth tax, which would be a 1% on financial property, so stocks, bonds, etc. With the first $1 billion being exempt from this. So I'm just looking at the time, we're at 12:58 now. And so question, just very briefly, question 4A really asks your opinion around this idea of if you think that the idea of a financial, by taxing financial wealth creates a fairer system. And question 4B asks for your opinion about the about the exemption for the kind of beginning of the property tax. So, expanding property tax to include financial property of over $1 billion. So I'm just going to leave it there. We've only got a minute left, but I'm going to hand things over to David there.
Sure, and I see a note from Dat who says in regard to the tax town halls, there's 7 town halls for the state tax structure working group for each geographical region of Washington, 2 sessions each day for those who cannot attend one or the other. And the survey is available on that link that's in your chat function, taxworkgroup.org/survey. We also sent a link to that survey on our recent Washington Policy Center email, and it'll be available on a blog for Washington Policy Center at washingtonpolicy.org as well. So if you forget or miss it, you'll be able to grab it then. We have as many questions left over, actually more questions left over than we did at the beginning of answering questions. So we'll have to save those, I think, for another time. There's a lot of those, so this is a conversation that'll be ongoing to be sure. I want to thank the State Tax Structure Working Group for making the time and offering this presentation. And for each of you, I think 156 of you or more signed up for this presentation and for coming on and participating. And I expect each of you to be sending in your comments and feedback. For those of you who haven't had time to get it answered, I'm sure the Tax Structure Working Group would be interested in hearing from you as well. And like I say, we save the questions that are unanswered, and we try to get back to each person to get some kind of answer to that question. So don't think that we're ignoring those. We will save them and get back to you. I want to thank you, Andy, for making the time. We had some technical issues, but we made it through, and I hope this was of value to your group. Is there anything people should know if they want, they're going to come take this information, share it with friends and family and others, in terms of how they should get this information to your group on their views as to what our state tax structure should look like?
I think Dat may have, or Morgan may have any kind of additions to this, but I think one of the main things is attend a town hall if you would like. If you want to find more, if you have lots of opinions on that, that's fantastic. We want to hear them. And the big thing is try and fill out the survey. It is so helpful to us, and quite simply, the more information and feedback we can get, the better the future policy development can be.
We've got a survey that we asked people to sign saying no to an income tax on capital gains. We've got about 15,000 signatures. So if you're interested, I'll send you that letter on what people signed off to. I think that might be of value to your organization as well, given the number of people that responded to that, and we'll make sure that gets to your organization as well for feedback.
That sounds great. Yeah, do send those things on. That sounds great. Okay then. Well,
all right.
Thank you very much.
Thank you, and I'm sure we'll talk again. Thank you, and thanks to all of you for participating as well.